Hey, Kimo Sally here. I'm going to do something a little different. Usually I'm just trying to teach how to read waves, and I usually stick to one asset, which is Bitcoin, to try to demonstrate how to enter and exit trade setups. But looking at this monthly chart on the S&P 500 should have you a little concerned. Just looking at how things have went up since 2009 from $600, and we're currently 9 times that. And this wave pattern is looking like it's getting close to being complete if you don't have this repeat up here and continue up to like 7,000 or something like that for a blow off. A blow off top certainly can happen. What I am seeing here is the divergence on the RSI. So the RSI is your relative strength index. As you can see, back in 2017, the trend was very strong leading up to that. Very, very strong trend. And since then, on the monthly chart, you're not as strong. You got up to there in price, but the relative strength is not as strong. And then you had a divergence right there that sent you into 2022, and now you are diverging again. So usually 1, 2 divergences is acceptable. It's fine in a really strong trend. And as we can see, this stock market has been very, very strong. But triple divergence on a trend line regression on the RSI, it's right around the area that you would look for it to top out. You just need some local divergence here. So maybe on a monthly, this comes down and back tests the 70 area before rejecting and then going much lower. So you can still have a pop up higher to get that divergence locally, but this is ominous. This looks very ominous. This is the monthly chart, so I do want to zoom into this weekly chart and just go through the current trend, what it looks like on the weekly. But before I do, on the monthly chart, just want to look at the pattern, the way this went up as an ABC, had a little pop, and then you had this down move, up, down, up. So this looks like, we're in that area now. I can get a little more zoomed in on the weekly chart, but that's kind of the way I was looking at this thing. This is kind of an ABC here, that leg there, and then an ABC there. And we're kind of doing an ABC here, and that can be completing. We'll zoom into the weekly chart and see what it looks like and see our divergences. So here we are on the weekly chart, and you can see the same thing happening with all the peaks. They're getting divergences. You're getting triple divergences. This is the same type of thing that I saw before the COVID drops in 2020. It kind of looked very similar, where your trend is losing strength, and the relative strength as it's pushing up. It's losing strength in an area where I'm kind of seeing this pattern is completing, that being your ABC, then your ABC there, doing one final push just like down here. And those actually look the same for now. From there you had a grind down and up like an ABC, down, and now you're grinding in an ABC fashion. So you may have topped out in the stock market already. I have several reasons to believe that it is possible. It is reaching targets. Target that I called out probably 4 years ago was 5,700 as a wave 5 completion. That's when I was a lot heavier into Elliott wave, and I was measuring everything everywhere. 5,700 was the target for me on the S&P 500. But yeah, you have a potential for a completed move here. I'm just wondering if we get a blow off real quick, but if you're not positioned for it already, I wouldn't try to jump in and catch it. It's a dangerous game playing that pump and dump. But your stop loss would have to be down here, most likely. Now, coming into the U.S. elections, we could have a down week into that happening. And maybe this is your ABC and you get one more pop up to complete the pattern up just under 6K, if I had to guess. That's kind of the measurement target of this initial leg right here. If you were to measure it, pop it up there. It actually measures fine just now. That can be complete. So maybe we wait for the election and get one more push up, and that'll be the sell. So initially when we got this configuration here and we had this drop down to here, I saw that as an expanding triangle, which is extremely rare in markets. You rarely ever see them, but it only arrives in wave 4 as per Elliott wave theory. So since then I've been counting this as a 1, shallow 2, 1, 2, 3, 4, 5, and then maybe this is your 3 and you get an expanded flat for 4. I kind of like the expanding triangle. And now we're pushing up for 5. So if that is the count, we want to measure it from the low, which just so happens to be 666 if you didn't know. And we'll measure to the top of wave 3, project from the low of wave 4, giving us the 618 as a target. So that target can either be from there or from the previous high, which would get you a little higher, up to 6,000 or something like that. But conservatively speaking, that's your wave 3. And that's how I derive the wave 5 target, which would be the 618 of wave 1 plus 3 projected from 4 gives you your wave 5 target. So that's the target that I've had for years now, and it's finally there, and it's looking fairly ominous. How ominous? Yeah, we will see how ominous. This could be a massive sell-off that lasts for decades, or we could be pushing down for another buy setup, and they just keep pumping liquidity. I'm not going to dictate whether or not they pump liquidity. I just look at the chart and look for the opportunities. Speaking of opportunities, let's lay a channel on this thing from the lows of 2009 to the COVID lows in 2020, and just move a channel up so we can see how price interacts with a markup channel. And you can see for the most part it stays in the upper bound of the channel, but then when it ultimately reaches the highs, you get to a condition up here where things are expensive, as you can see. At the lows, well, you can see this all through the midline is fair value or cheap or inexpensive. But if you really want the opportunities, you look to this area down at the bottom of the channel. If the markup phase wants to continue, that's where you would look. So if price wants to continue marking up, this is where you would look to enter some buy zones. And the next cycle low is supposed to be, I think, 2026, 2027. So somewhere around here, you'd look at 4,000. If you break below the channel, look for a back test, and then we're really in trouble. But given the divergences, you're looking toppy here, and you probably do a leg at least like 2008 down and break down the channel. If you break down the channel, then your markup is done, and you're definitely in distribution, and you should experience lower lows and lower highs on like a weekly / monthly chart, depending on how fast this gets down there. But if we are to just have a similar liquidity grab in a markup phase, you would expect this leg, similar to the COVID drop, somewhere from here, just drop down to very, very inexpensive, which would be the start of 2022. That would now become your inexpensive. So you go from expensive to inexpensive, and then maybe you continue pushing up into 2026 the way everybody believes. Well, I shouldn't say everybody. I should say many believe that we are having a new paradigm and AI is going to save the day, which maybe it does. And if it does, then you have your liquidity grab and then continue pushing up for more bull market. If the divergences play out and start confirming and you enter some kind of downtrend similar to either COVID or 2022 in a downtrend, and then you can push up out of the next cycle low potentially. But this looks ominous enough to say, hey, we're probably going to break the channel. This has definitely went on long enough. We're going on 16, 17 years, so it's time to look like problems are coming potentially, financially speaking, with the economy, things like that. We're potentially entering a bad period. Unfortunately, the NASDAQ on the daily chart from the 2022 lows looks even more clear to me. As you can see the path that everything went. You have that as an ABC. Then you had the correction, and then up and then down. And you did the same thing here. Correction, down, up, down. Looks bloody perfect to me. And now what you're doing up here looks exactly like what's going on down below. You're finishing off in an ABC pattern, and then this LeBron James crown. So you're finishing off in an ABC pattern and some kind of LeBron James crown. I think you got one more pop, and that should top it out. Just if it mimics what happened down there at the bottom. You had 1, 2, 3. Now you've got 1, 2, and maybe you get that third pop up to 20,900 or something like that. And then that looks like a completed move. What comes after that, I can't say for sure, but usually it's in the opposite direction. But it is something different than the trend that we've experienced for the past 2 years, which, if you remember, started sometime in October. I think it was October 10th or the 14th in 2022. Here we are 2 years later. Pretty interesting. And here's a chart that I've been tracking for a while, is the Nifty 50 from India. That chart looks cooked. If you take a measurement of potentially wave 1 and 3, projected from wave 4, you reach the 0.618 with divergence happening on a weekly from your wave 3 to your wave 5. So trend is weaker. And now you push down to the 50. I'd say a sell setup is coming as soon as the RSI makes it back up a little bit and gives you more divergence. But you may not get much higher, because you do have a potential lower low close. This could be your area for a lower high, and then the trend can reverse. That is very ominous that this close is lower than that close on a weekly on this particular chart. So Nifty looks like it may be the top. That may have topped out. And where's the money going to go to? Well, I heard Indians like their gold, so let's check out gold. But before we do, very briefly, in 2020, before prices crashed, the price of the Nifty was 12,000. It made it double, a little over double the price it was 4 years ago. Pretty impressive. So let's look at gold. Look at that chart. That is just crazy. I'm looking at the relative strength index here on the weekly and looking when it pushed up into this strong of a trend. It's back here. And price continued that much higher, so it was like an ABC right there. And now we're there. This may have a lot higher to go. I may be conservative in my estimations, but if we were to take it from the low to the current high, and say you get a small pullback, that puts you at around $5,000 gold before this thing stops. It kind of looks like it's repeating this leg, kind of going up. So let's measure that. See what kind of target you get. And if you get up to there, it'll be the 1618. It would probably consolidate there and continue pushing up to 7. I mean, just thinking Elliott wave theory, just counting the waves, your wave 3, you would expect to get to a 1.618. So there's a 1, 2, 3, 4, 5. And that would be a breakout and a back test on a channel or a trend line that goes way back on a monthly chart. So imagine that. If it was to break above this little resistance area up to the 1618, maybe get up to 5,000 area, pull back and back test that line and continue pushing. And this thing, shoot, it would probably go, let me get the measurement here. Yeah, 8,000 to 14,000, just matching these legs. That would be crazy. And then maybe it enters this type of consolidation pattern again. ABC consolidation pattern again up there, as the financial world accepted gold as money. Definitely possible, but yeah, monthly in the strong area of the relative strength index. That's very strong, very strong. So expect money to flow into gold, most likely, maybe during panic scenarios. Look for retraces or breakout back test of that line sometime in the coming years to go long again. This is very strong. And why is gold going to be so strong? It probably has a lot to do with this chart. This chart is the RINF. It's an ETF that tracks inflation. So this is the inflation expectations ETF. And this looks like a macro buy setup going back from 2016. We'll just draw a box around here. This looks like accumulation. See, selling climax, automatic reaction, test, test. Here's your spring. You're back up above this accumulation and holding above the highs. That says inflation is likely to continue with this type of wave pattern. Looks like a kind of low time frame distribution. So if we do have any type of stock market coming down, we may have a deflationary something or other to take out this liquidity, maybe test the back of the box here and go into a brief period of deflation, a deflationary bust / scare. But from there, I would see a buy setup. Just, previous supports act as support again. You made a higher high close, expect a higher low to come in right around that area, or this thing could just continue up from here. That's the kind of the more scary scenario. But yeah, inflation expectations ETF. This is a very nice impulse off the low after the spring. So back test, and inflation is going to pick up in the coming decade. That's my expectation based upon that. Where does inflation come from? I can assure you this is not the same chart as the RINF inflation's expectations. This is the 10-year bond yield. So this works inverse to the bond itself. The yield goes up as the price of the bond goes down. So if the price of the 10-year bond goes down, that means they're oversupplying it and the price has to go down. So if the price goes down, the yield goes up. Kind of the way it works. But yeah, we have a monthly chart here, and this is very ominous. If you look at the breakout out of accumulation, same type of box. So if you were to have rates push down, if they do get below 3%, you may find support down at the 1.3 where previous support was. But based upon the way this is looking, I'm not sure that it's going to happen. This looks like it wants to push up first, then come back down and back test. So it is possible that we do get blow off tops in markets with the bond yield pushing up to like 8 or 9% before a deflationary bust, and then this pushes up further. We'll have more inflation because you have a higher high. No matter what, you're going to have a higher high somewhere here. So you look to buy the higher low. Same concept that I do in all my charts. You look to buy previous support or the previous resistance that flips into support. So if price stays above the box, that is very bullish. This made a lower low close. Now it's looking to potentially make a higher high. If this makes a higher high, I'm anticipating this leg to come up here and pull down again and then continue. And then we're in for some deep doo-doo. So US 10-year bond yield. The 2-year looks very similar. It looks like an oversubscription to US Treasuries is going to be going on, especially in 2024, running towards the end of it, because the debt ceiling negotiations come back early next year. I think there is no debt ceiling in the U.S. until the 5th of January, 2025. Then they have to start renegotiating the debt ceiling. And if there is no debt ceiling thereafter, or they can't come to consensus, or if there's problems with the election and the United States is in turmoil, then they may have a problem with the bond market. And that could issue problems with debt, that could issue problems with credit expansion, that could lead to an economic contraction that we have not seen in decades. So we will see what happens, but all these charts are pointing to very bad things happening in both directions. I mean, we've had inflation in the 1970s. We've had a Great Depression happened in the 1930s. What if this time is a mixture of both? A Great Depression mixed with very high inflation. It would be probably worse than anything we've come across or historically have seen. The charts will probably tell you the pattern, but these all look like in the coming decade we're going to have inflation, and it's on our doorstep. We may get a quick deflationary bust, but then coming out of that, the money printer is going to go, and it might trigger pretty quickly. They might take a while to do it, but if we have something that's very deflationary, they may react very, very quickly and overreact to it, and it's not going to be good. It'll be very, very inflationary, and that may destroy the currencies. Then you look to gold, which gold looks just strong, and gold is strong for a reason, probably because the bond market is pretty weak at the moment, and everybody and their grandma is selling the bonds, including the Federal Reserve. Well, the Treasury is selling them, obviously, they issue them, but the Federal Reserve of the United States is also letting those run off of its balance sheet. They are no longer buying, they're actually trying to get rid of what they have. And if they don't want them, and they're the buyer of last resort, who else wants them? Russia? No. China? Yeah, they've been dumping theirs too. Japan? Yeah, they may have to try to sell some in order to preserve their currency over there. It's just a big mess. So it's not looking good for U.S. Treasuries for the demand, but the supply looks like it's going to keep coming in. And this is why you want to hold some gold, that old shiny rock. You could also place your bet on Bitcoin. You probably would want to weigh a little heavier towards the gold side in a portfolio because Bitcoin is higher beta and the risk versus reward is there, and you don't need to have a lot of it in order to capture that, to realize that profit or safe haven, if it does indeed act like a safe haven. But we will see. I think gold is your safe haven. Bitcoin is the opportunity that maybe it's your safe haven, but that's a gamble. So protect yourself, know your invalidations with all of these ideas. These are macro ideas, and you got to keep your stops tight, like on all of this, even on your ideas. If your ideas are invalidated, you have to switch. If things don't look right on a chart, you got to get out of the trade. If things aren't looking right in society, you got to get out of that trade too. So keep your stop loss where it needs to be, and stick to it. Hope this was all helpful. It's very bad times coming, I think. It's almost here.